I got to ask you, Mark, because, I look every day and I see all these firms have this checklist for when the bear market's over. You have a checklist and nothing's checked. like nothing is. There's no sign.
Like 1 in a million? You're telling me there's a chance? Come on.
What's that? Dumb and Dumber?
You better believe it.
All right,
Smarter.
All right. So look, I mean, like the DXY needs to start coming down. That's the dollar index. The VIX needs to come down. We need to see the Fed funds rate exceed CPI. So there's a lot of things that we need to start checking off before we have some conviction that a bottom's in. So on average, bear markets that last at least 9 months are down 38%. We're down, what, like 20, 21% right now?
Right.
We haven't come anywhere near that. So I do think there's further to drop.
But, Scott, you actually, at least from the last couple of weeks, you like the action.
Yeah, I do. I think, like Gary K pointed out, man, I mean, we've got higher rates, higher equity markets. That's the first thing we've seen all year of this occurrence. And Tep's right. I mean, there is a lot of stuff that's not checked on that list. I mean, you've got a great checklist, Tep, in all of your life of a lot of things you do, let alone investments. But here's the problem with that I have. Those checklists or those check marks are going to start popping in. And as an investor, a long-term growth guy, I want to start getting ahead of some of those check marks.
You want to be in before the check is checked.
Yeah, because, look, I mean, the market's going to preempt a lot of that stuff. And I think the market's already seeing the Fed starting to step back and change their mind a little bit from the hawkishness they've presented so far.
So Friday, we had this reversal. Yep. Some people say it was a setup. You saw what happened at Bank of Japan. And then, of course, the Wall Street Journal, the latest Fed whisperer, if you will. And then Mary Daly, she changed her tune a little bit just from a few weeks ago about being aggressive with the Fed and, making sure that perhaps that they slow it down a little bit. Should investors take the bait right now, Mark?
I would say no. Look, I think when it comes to the Fed, I don't think the Fed is vested in protecting the 40% or so of people that own stocks. I think the Fed is more interested in making sure that those people who live paycheck to paycheck and can't afford to put food on their table, that inflation is crushed, right? We need to squash inflation.
Even if it means some of those people have to lose their jobs.
I don't think they have another recipe for how to cure inflation. They know what happened historically. They know where we screwed up by taking our foot off the brakes too quickly. And I think they're hell-bent on making sure they don't screw up again.
I want to bring up a chart because Gary mentioned something about gridlock. And historically, he's spot on. Take a look at this. So markets do really the best when there's a Democrat in the White House and there's a split in Congress, which, some polls suggest, or there's a Democrat in the White House and the GOP controls the Congress, 16% on one, 15.9% on the other. So, Scott, this is really critical, this midterm election coming up for the markets, isn't it?
Setting up nice because it looks like it's going to go that way. And I'll tell you what, you said markets do best, Charles. People think markets do best when rates are going down. Markets actually do best, boys and girls, when rates are stable. So if we get to that stability rate, rates going up, not good, right? Rates going down, sometimes good. Rates stable in the Fed funds rate would be great for companies, great for markets, great for that point you made with Mark there about how these are companies now they can reinvest in their businesses, assess the cost of borrowing, create more jobs. So we do save this economy because we have stable rates.
Even if there's a new normal,
yeah, because it's a more stable environment. Yeah, because it's a more stable environment. Because Tep made the good point. That's Tepper if you're playing at home, by the way, boys and girls. Mark Tepper, Tep. He's right, though. Rates got too far low, too far down, and they're probably going to be too high. But once they stabilize in that middle range, Charles, we got to get back to reality here of the 3 to 4% rate.
In the meantime, then, Tep, how are you playing this market?
All right, so our latest buy is Aon, A-A-O-N, not to be confused with Aaron. Remember that one? Right. So it's a commercial and industrial HVAC company, zero residential exposure, 95% of their business is done right here in the U.S., so they really don't have the currency risk. And companies around the country right now are working on increasing air quality, increasing energy efficiency, so that's a nice play.
Yeah, I see that the wellness seal on these buildings, and I guess that's going to be the next thing. What are you doing, Scott?
Consumer staples, man. You put up the sector attributes of where the earnings power is and where the revenue is. So looking at Procter & Gamble and Pepsi, both great revenue numbers lately, good profitability, pricing power. So they have the ability to ride out some of this inflation stuff, even if it doesn't get as eradicated as fast as I think it does.
So we got a lot of stuff this week, including PCE, which has been elevated even above the CPI because of Powell. Is there a chance you might get a chance to check some of these boxes this week?
It's possible, but I'd say unlikely. I mean, look, we have a huge week with regards to earnings. I mean, pretty much every big tech company, I believe, is reporting this week. I don't think it's going to be a good week from a guidance standpoint. VIX has to come down a lot. I mean, it could start that. Maybe I
I'm
can
going to
check
take
off
him
one
out
box.
for some beers tonight, and we're going to get some boxes checked.
Right.
So check in with us at 8 p.m. Tep's going to bring his plastic.
You're invited too,
MasterCard's
Charles.
another good one, by the way, after tonight. Bring that plastic,
Tep,
Mark. We'll swipe some MasterCard.
Mark, Scott, thank you both a lot. All right, folks, start a link.